You're welcome to class once again. My name is Emmanuel Adeniji. This series is still titled Accounting Equation, and in this class we'll be looking at Accounting Equation Part 2. In the last class we looked at Accounting Equation Part 1. Please get the video on Accounting Equation Part 1. Now before I continue, I want to encourage you to share this video to as many people as possible. Now let's take the objective of this lesson. At the end of a lesson, students will be able to 1. Explain the interrelationship between A. Assets and capital, B. Assets, capital and liabilities. 2. Formulate accounting equations for 1A and 1B above. Okay, in the last class I told you that assets is what belongs to the business, what the business owns or what is owed to the business. So the total resources which the business owns and uses to run on a daily basis in order to continue to make sales, in order to continue to generate revenue, are referred to as assets. Now, if assets is the totality of what the business owns and uses to run, okay, and then that same class we said capital, also known as owner's equity, is the totality of the owner's investment, everything the owner has put into the business. Okay, everything the owner has invested into the business, okay, so that the business can bring the owner returns in multiple fold. Okay, we said capital in a way is a liability and indebtedness of the business to its owner. Now let's establish something here. Let's find the connection. If assets is the totality of what the business owns, okay, and uses to run, and capital is the owner's investment, everything the owner has put into the business, then it will be correct, okay, if all the assets are supplied by the owner, okay, then it will be correct to say assets is equal to capital. Yeah, assets is equal to capital. Okay, now let's see the interrelationship between assets, capital and liabilities. Now coming back to assets, if the entire assets of the business, everything which the business uses to run, okay, which the business owns and uses to run, is provided by the owner and third parties, that is, if the components of the business assets, okay, are what the owner has provided and what third parties have provided. In case third parties have provided funds to the business, also borrow the business funds to run, so it means the assets will be equal to capital plus liabilities, that is what the owner invested and what third parties have supported the business with. So in this case, the accounting equation will be restated as asset is equal to capital plus liabilities. Okay, let's do a quick recap. While we're starting, I said we're going to be able to explain the interrelationship between assets and capital, B, assets, capital and liabilities, which we did. We said assets, if the total resources owned by the business and which it uses to run is entirely provided by the owner, then assets will be equal to capital. But if the entire assets which the business uses to run is both provided by the owner and third parties, then the accounting equation will be restated as assets is equal to capital plus liabilities. Now of course we have formulated accounting equations for them as well. Thank you very much for being in class. Hope you enjoyed class. Yes, I'm sure you did, because I did too. Okay, in the next class we'll be looking at accounting equation part 3. Please do not miss this class on accounting equation part 3. Before we go, I want to encourage you once again to share this video to as many people as possible. Thank you very much for being in class. I will see you in the next class on accounting equation part 3. My name is Emmanuel Adeniji. Bye.